Thanks a lot. Well, do oil companies like ExxonMobil really need to change?
Let's ask our Bulls and Bears panel. We have Scott Blyer, Tobin Smith, Gary Kaltbaum, and Peter Schiff joining us. Peter, I'll begin with you here. Obviously, the stock has done unbelievably well. Profits are at all-time records. Do they need to be listening to shareholders at a time like this?
ExxonMobil?
Yeah.
It's one of the few oil stocks I don't own. I mean, I own a lot of oil stocks.
Why is that?
I don't know. I own mostly.
Are you awake right now?
I own mostly foreign oil stocks, but I own a few U.S. oil companies, and that's just one I haven't owned.
Okay, but you've always been very liberal with talking about anything. So why did I catch you flat-footed?
But you should listen. Obviously, you want to listen to shareholders own the companies. A lot of times, managements forget that. They usually keep all the profits for themselves. But oil companies are some of the few companies that actually pay decent dividends now. And I'm mainly buying them for dividends and to get into oil.
Well, Toby, the fact is that most shareholders listened to the Rockefeller heirs and thought, geez, who are we going to go with? Somebody's recommending that we go with more wind power. Somebody's recommending that we go with profitable oil. They sided with the oil guys.
You know, I find Exxon interesting because the biggest problem here, forget about the shareholders, you got to look at where they have their reserves. Most of their reserves are outside the United States, and those reserves are in contracts where above $50 oil, they take less and less of the actual oil. So what's happening is, I think they're going to have their reserves marked down to reflect the fact, if you price oil out at, let's say, $80 to $100 over the next 5 years, they're going to be getting a substantially lower amount of oil. That's why they showed that their reserves, last quarter were down, and everybody said, how could that be? There's no place they can drill that they're making any big finds. Of the stuff they have, they're actually getting less. So I think that this is sort of taking us away from the main issue. The main issue is if we're not allowed to drill in areas where they can get a lot of oil, the reserves are going to go down and the company's going to be worth less money.
Okay, so Gary Kay, on that level, do you think that maybe the Rockefeller family had something going here, that maybe they're saying, look, 10 years down the line, not 2 in front of your face?
Look, the bottom line is all these companies have got to get used to the new paradigm, as they say, as far as higher oil prices and what to do about them and how to handle them and how to make most for the shareholder. And, it's funny, I look at stock price performance at all times when I think as a shareholder, and Exxon in the last year has completely lagged the drillers and a lot of the explorers, and I think a lot of shareholders will look at that and say, wait a minute, some of these other things are up 50% and your stock is flat. And even though Exxon hasn't done anything wrong, there are going to be people asking. So they do have to look at that. But overall, I don't think they have to change big time. I don't think oil companies have to change big time. I think they're doing their jobs well and obviously profiting pretty darn well because of oil prices.
Well, Scott, let's look at one thing specific that the group of family heirs wanted to do. They wanted to split up the job of the chief into 2 parts, chairman, CEO. Does that make any sense?
It might, but the bigger question here is shareholders, government officials, even Bill O'Reilly on FNC want oil companies to take responsibility for setting prices. I have news for you. They don't set the prices. The marketplace sets the price of oil, not ExxonMobil. And the fact is, ExxonMobil
Peter would say it's the Federal Reserve that sets the price. Go ahead.
ExxonMobil is in the oil business. They're there to drill, to produce, to refine, and to market. If one day alternative energy pays well enough that they want to allocate capital to that, then and only then it makes sense. Before that, it doesn't make sense for them to do anything of the sort, period.
Well, one of the problems, though, for the American oil companies is that Congress is constantly threatening to take their profits away. And if they make
windfall profits tax.
Yeah, and of course
that never happens, though.
But the threat is out there, and don't say that. It has happened. We did have a windfall profit tax at one time. I remember
a long time ago.
And there's no doubt in my mind they're going to have it again. I think you're.
They'll stop drilling.
The family. The Congress gets in front of Exxon and says, "Why aren't you drilling more wells?" And the answer is because there's no place to drill. The family, I think, is just taking the eye off the ball here. They're saying, "Geez, we should be doing more green." Taking the CEO and dividing those jobs is not going to change anything.
They should fund a new company with their money, if that's what they want to do.
Yeah, Gary, quick.
If there's one thing I want oil companies to do differently is get more offensive when they're up on the Capitol Hill, because what those congressmen would do to them,
they melt in front of the congressmen and senators. They melt. Absolutely.
They turn into tar.
Well, everybody does that.
You would have thought the CEOs were criminals sitting up there when these are CEOs of major companies.
They pretty much admit when the senators say, "Are you criminals?" They say, "Yeah, we're criminals."
Oh, that's just a big
what's
show.
your compensation? I don't remember. That was the one that killed them.
That's a big show.
All right, Thanks a lot.
Well, whatever the future holds.
Tomorrow is another American icon heading into foreign hands.
Some say the possibility of that Belgian brewer InBev buying Anheuser-Busch, that possibility would be devastating for America and Budweiser's home of St. Louis. For more on that, we welcome Jeremiah McWilliams, business reporter for the St. Louis Post-Dispatch. Good to see you, Jeremiah.
Good to see you guys. Thanks.
Okay, so I would imagine it's understandable. People in St. Louis might be a little bit upset that this venerable name, Anheuser-Busch, might be taken over by a Belgian company. But what do you mean is bad for America?
Well, some folks are saying that this is an iconic landmark company in St. Louis and also America. It's got a brand, Budweiser, that's the #1 beer in the world. Here in the city, it's hard to turn a corner without noticing Anheuser-Busch. In the studio here, there's a Anheuser-Busch community room. As I was walking in, they have huge charitable contributions and about 6,000 local employees. So they are big here. They're a good corporate citizen. And that makes people very nervous when InBev expresses interest. Even though these rumors have been swirling around for a long time, now it looks a lot more serious.
But Jeremiah, the family is very divided. The Bush family is very divided. There are some members that that want it to happen, some members who said it definitely shouldn't happen. So if the family can't get its act straight, what about all the stockholders?
Well, August Bush IV, who's the CEO now, he reportedly is not interested at all in giving up control of the company. But it's important to know, David, that this is not a family-owned company. The family actually owns less than 4% of the
Understood,
but
the point is the family has had a tremendous impact, obviously, on the company over years. The current chairman is trying to sort of make his mark because he's only been in that role for several months, is obviously against it because he hasn't had time to make his mark. But is this just become an ego battle between him and the folks who want to make the company more profitable?
Well, it's hard to say. He's said before that really the only good takeover defense, the only takeover defense that's good for shareholders is to grow faster, which is true. But Anheuser-Busch has struggled to grow in the U.S. I think he knows that. They're putting a lot more money into marketing, and they're trying to get themselves moving in the United States, where that's the vast proportion of their profits and their sales. So it's hard to say where exactly the family will come down on, but at the end of the day, it's really going to be up to shareholders because the management really doesn't have much of a takeover defense at this point.
And shareholders want what's best for their shares and their dividends, et cetera. And you know what? If this comes down to a Unocal-CNOOC thing, it's ridiculous. I mean, we've got a free market system here in the United States. It'll be so interesting to watch. Thank you, Jeremiah. Good to see you.
Thanks a lot, Jeremiah. Appreciate it.
Thank you, guys. Hope that was better than the Barry Diller interview. Get that man back.
At least you didn't use one-word answers to the questions.
Yeah, he's like, no.
Thanks a lot, Jeremiah.
They cut Barry off a little early. He did expound upon the fact that he would not be putting Expedia private. But anyway, so would this deal be bad for America? An American brand? This is like, it's good for America to keep it in America. Let's ask our Bulls and Bears panel. All right, Scott Flyer.
I think this is a done deal. I think it is an amazing deal. Listen, these guys from Brazil and Belgium, the InBev, this was an $11 billion merger. They're taking on a $50 billion deal. It's going to happen.
It's a $40 billion market cap.
This deal is not going to get done for less than $70. The family has nothing to say about this, really. Politicians really are not going to be able to do anything. And what do you expect? The dollar is weak. Foreigners are going to come in and buy America's great brands.
Well, you're singing music to the ears of Peter here.
But shareholders win.
Just for the folks who don't know, the company that wants to acquire it was founded in 1397. I mean, this is not
Germans.
Yeah, exactly. By Belgians and Germans. I mean, this is not exactly this is not exactly a newcomer into the business.
Sure, but it's not exactly is this bad for America. It's the consequences of our economy which produce these enormous trade deficits. It's failed monetary policy and economic policy that put all this wealth into foreign hands. We bought all these products from the rest of the world. We couldn't pay for them. We don't have the manufacturing infrastructure to pay for our imports with stuff. So now we're paying for all the trinkets that we bought by exporting our companies, our assets.
And now it's efficient.
It's not efficient
to manufacture overseas.
Hold on, Gary, go ahead. What did you say, Gary? Go ahead.
I mean, what does that have to do with beer companies? Look, Tobin knows more about alcohol than I do, so I will defer to him. But let me just say
Is that a shot at the Irish? Is that a shot at the Irish?
I thought you're Scottish.
There is nothing wrong with companies coming in and looking at our companies that they find value there. I see nothing bad about it throughout history. We have bought foreign companies. It is good for corporate America. I see no problem with it. Whether the deal gets done or not, I don't know. This thing has been rumored for about 18 months, so I'm not so sure it's going to happen.
Yeah, but it's symptomatic of a nation in decline. Our standard
No,
living
it
is falling.
isn't.
More and
No,
more
it
of these
isn't.
companies are going to be bought up by foreigners. We're too poor to
eating
keep them.
into my airtime. All right. First off, number one. Number two, in a global economy, this is exactly what we need. Now, for instance, even in the CNUC, even the Unical thing, when they were looking to buy Unical, no one quite figured out that 75% of Unical's oil reserves were outside the United States.
Right.
I mean, so
but we owned them.
Well, it doesn't, Peter. Hang on. The bigger issue here is that if we're going to get sort of xenophobic, or we're going to get scared and get protectionist, then what happens is our asset values will go down because the biggest people in the market won't come here. So,
I'm not talking
I don't
about
care. Forget about the iconography here and Bud being owned by a foreign company, but it can go the other way as well. And this is the natural order of markets.
I'm not talking about being protectionist, but a nation in decline, its assets get bought out. Wealthy countries buy.
It is what it is.
Right.
That is the way of the world. And you know what? Nobody complained when it was the other way around, and we had the power, and we were buying foreign assets.
You're saying that is the way of the world. American is getting poor. Our standard of living is collapsing. Our life.
Shareholders, including Warren Buffett, make a killing.
They're not going to get a killing. They're going to end up getting dollars that have been a debased value, and the real assets are going to go to foreigners, and we're going to get stuck with our worthless paper money.
They are going to buy with dollars.
This is a terrible trend.
They're going to buy with dollars.
You guys can't see that.
A dollar has enough value to buy Budweiser.
Hold on. Gary, is this a trend, or is this just something specific to Budweiser?
Probably to Budweiser, but we are seeing more from across the pond buying and more people looking. And by the way, the beer glass being half full at this point in time, maybe this is just a great asset that somebody is longing for. That's a good thing about this country.
And they also may be overpaying for it, too, because if you look at the actual growth of the business, I would make an argument.
That was the makeup of the airtime you lost because of Peter, by the way. All right, we got to leave it at that,
he owes me 30
gang.
seconds.
Coming up, driving.